I'm going to share with you my number one trading strategy that I have developed over the past 8 years of trading the markets in 3 simple steps that anyone can learn. Doesn't require any crazy math, no crazy indicators, nothing but simple support and resistance trading. So step 1 is just to find the right stocks to trade. For this exact strategy, I call it buying the first green day with news. So what that means is you got to find stocks that are gapping up and have some type of catalyst. I use a scanner called Scans. You can click the link, I think, up here somewhere. That'll link you to my review and breakdown of scans, and you can copy my exact scanner settings, or just join someone that has a watch list. I make a watch list every single day. And in fact, on the morning of ECIG, I did a pre-market webinar where I called it out and I said, man, guys, I like this so much. And here's a clip of that real quick. You can go long off that prior level to 230s, but I'll just wait for the break and retest. But I do like this. I kind of like this one the most. If it breaks out, I think it's the best setup of all the ones I saw so far. And here's my watch list that I posted that has VCIG as my number one pick and the setup broken down perfectly. If you can't afford a paid scanner like Scans, then using a scan on FinViz, like having a gap over the previous day close, can help you narrow it down somewhat, but having a paid scanner is really powerful. So then once you find a proper stock that has a gap up, you just want to draw where the pre-market high is. And I do that by using the 5-minute line chart. This is my secret because it tells you exactly where the resistance is and just mark off where that top peak is. Here it's at 271. And then while we're here, mark off the next support lower, right near 250. And then before the stock even breaks out, you want to have potential levels of resistance and kind of plan out your trade. So by doing that, all we do is go to the daily chart. So here we are on the daily chart, and then I just do the same exact thing, use the line chart to keep things very easy, and just go left and up. And whenever you encounter either a valley, which looks like a V, or a peak, which looks like a caret or whatever, you just mark off a level. So here we can see we have resistance at 383. And also on my daily charts, I usually mark it off as red just because it keeps things labeled easily. So then after that, we have one up near 460s. Then after that, up near $5. Then after that, it gets a tiny bit messy. So I also use the weekly chart. And then on the weekly chart, I just mark them off as yellow. So here, next key level is at 650s. Which I'll make yellow. And then up at 770s. And before we go any further and break down the trade, let's just look at real quick where today's high was. As you can see, the high of day during this spike was 770s. And I drew that without even looking at the stock. So this is just proof right now that what I'm saying works, and to stick around through the rest of this video, because trust me, I'm going to break it down so simple that anyone can learn this. So now step number 2 is just to wait. Wait for the stock to break out. And this is so hard for some people because they want to predict the breakout. No, just sit back, wait for market open, and then let the stock break out. If it does, then pay attention. As you can see here, we had one candle that had a very strong breakout, went from 270s to 320s, and it closed above. That's the key. You want to see the candle close above, because then on the line chart, it looks like an actual breakout, right? And then from here, you can plan the trade. Once again, this is using previous resistance as new support. So your entry price is the previous resistance. Here, it's at 270s. Your max loss, next support lower at 250s. First target is from the daily chart, 380s. So you're going to buy 270s. Stop out if it breaks below 250, and your first target is 380s. Now we have a very powerful tool at TradeBlade, which is called the Trade Planner, which will tell you exactly how many shares you can use on your specific trade based on your account size. So if you follow this trade planner, you could take 100 losses back to back to back, and you will not blow up your account. That's how powerful this is, because it bases it off of risking 2% of your account. So here in this case, let's say you have a $5,000 account. That means that on every trade, you can risk $100. So using an entry price of 272 and a max loss of 245 and a first target of 378, we know that we can take 370 shares on this trade. And it also tells us that at our first target, in order to make $100 or 1R in this case, we have to sell 94 shares, meaning that we're going to have about 280 shares left over in case it goes higher that will make even more money. Also, this has some other profit targets just based off your R value if you don't have targets or you're bad at drawing levels from the daily chart. So this is a very powerful tool that I use every single day. And it's the reason why so many people that join me are staying consistently profitable, because they have their risk management done for them pretty much, right? There's no more random buying of shares. You're risking the same exact time every single time, and you're basing the trades off of the chart, which is what no one else does. And that's why no one else is successful like I am. So back to the trade. We can see the stock broke out, and now we want to have the trade plan made out, right? We have our size based off the trade planner, and now we just send a limit buy at that previous resistance and then let it pull back. If it does pull back, it's the best entry possible. As you can see, nice breakout. Eventually the stock pulled back. We got our entries. And then once you get the entry, all you say is, all right, as long as previous resistance holds as new support, we stay in the trade. Simple as that. Our first target is at 383, and we have a hard stop just in case on the break of 250. And then we just sit back and wait. The stock progresses, had a nice initial break up to 360s. And then once it breaks out further after your entry, just follow the rules. Previous resistance as new support. As long as it keeps on doing that, stay in the trade. So use the line chart. And you can see resistance is at $3. That should hold as new support. It did. It pulled back and held. Then we have it at 330s. As long as that holds, we stay in. And it did. And also at that same time, the stock spiked to 370. So we take our first profit and then hold the rest as long as previous resistance holds as new support. It's super, super simple. And just repeat this process of taking partials into known levels and holding until it fails to hold previous resistance as new support. And you can see all during this time, it held perfectly. Went all the way to 770s. But then here, right, if this was bullish, it should have held previous resistance at 650s as new support. But you can see it didn't. This is the first time that we had one candle that closed fully below. And at this point, right, with the context, man, it's up $5 per share. It has smashed through so many profit targets. It's hitting significant weekly chart resistance. It's extended from VWAP. All those things come together to tell you, hey, you know what? Maybe it is failing the trend and maybe it is time to exit. So then you just sell the rest. Sell the rest into previous resistance as new resistance. And just that simple process, you can see nailed the top. And since then, pulled back from 670s to $4 per share. A very simple process of just using previous resistance as new support. I say it a lot, but it's really that simple. Marking off your daily chart levels of resistance, taking partials along the way, and then once it shows that backside, accept it and sell into it. Of course, having a rigid plan of managing risk like the trade planner helps a ton. However, as you can see, we had many members who took the same exact trade as I did and took partials in the same exact way. So this is a repeatable setup that anyone can do. And that's pretty much it. Step 1, find the stock that's gapping up first green day with news. Step 2 is wait for it to break out over the pre-market high and then buy that previous resistance as new support. And step 3, mark off your daily chart levels and take partials into them while using the trade planner. And as long as it holds previous resistance as new support, just keep staying in the trade. Once that fails, accept it, get out, and then rinse and repeat on the next day. So that's pretty much it. If you have any questions, leave them down below in the comments. I'd be happy to help you out. If you enjoyed this, give me a like and a subscribe for future videos, and I'll see you in the next one.